watching Business World Live. I'm Danny Laurel. It's the start of the last trading day of the week. Let's go straight to our top story. Finance Chief Sonny Dominguez says the economy will be fully reopened by early next year as the COVID-19 cases decline. Pamela Vasquez wraps up the Business World Economic Forum of 2021.
Finance Secretary Sonny Dominguez opened Day 2 of the Business World Virtual Economic Forum, highlighting the Philippines' strong financial position. Dominguez says the economy will likely hit the high end of the government's 4 to 5% GDP target for the year.
We expect to do even better in the fourth quarter as we continue to relax mobility restrictions. We will continue easing restrictions as infection rates continue their steep decline. With current trends, we expect to achieve the full reopening of the economy by the onset of the new year. We are ready for a strong recovery.
Meanwhile, the CEO's panel underscored the Philippines' great leap forward in digitization.
The Philippines has seen 12 million new digital consumers since the start of the pandemic, of which 63% are from outside the metropolis, and 95% of pandemic consumers are still consumers today.
But cybersecurity and verifying user identities remain key problems, which PayMaya Philippines Chief Strategy Officer Paulo Azola said could be solved by the national ID.
Other people are using other documentation that is more easy to forge. So definitely the proliferation of the national ID, I think, is a massive development for financial services.
Meanwhile, DTI Undersecretary Rafaelita Aldaba announced that the agency is launching a number of programs for startups, including a venture capital fund
together with venture capitalists and other co-investment partners. An initial amount for this year of 250 million pesos has been allocated for this matching investment program. And for next year, another 250 million pesos has also been allotted.
The two-day virtual forum was organized by Businessworld and gathered more than 40 local and international experts to talk about the country's roadmap to recovery. Mobile journalist Pamela Vasquez, We Are One News.
The Bangko Sentral will continue to maintain its accommodative stance as the Philippine economy is not quite out of the woods just yet. Bangko Sentral Governor Ben Diokno said they would like to see evidence of sustained recovery first, given the risk of new cases as seen in other countries. The Philippines has recently seen a sharp decline in the number of new COVID infections, which prompted the further easing of mobility curbs. The Health Department reported 975 new COVID cases, bringing the active cases to nearly 19,000 as of Thursday. While the economy has further reopened, there are worries the Philippines may see a COVID resurgence similar to the ones currently experienced by Europe and the United States. The Bangko Sentral will have its last policy review for the year on December 16th. Diokno earlier said he does not see the need for policy rate adjustments, at least until the end of 2021. Let's kick off the market report with a health check on the local unit. Our peso trading at 50 spot 475 to the greenback. That is quite weak. This, of course, amid several issues here. For instance, the net foreign outflows coming in at $221 million. This as the foreign portfolio investments were down 20% from the previous month in October, but still at least those outflows were lower than what we saw in 2020. Of course, we had already reported as well our deficit easing to a 6-month low, but now all of those news as well in terms of the Bangko Central's actions, especially with the fact that Governor Ben Diokno also mentioned that he is nevertheless open still to reducing the triple R. We will have more on that later on. Meanwhile, let's take a look at the global shares here overnight. You can see the US was closed for Thanksgiving holidays yesterday, but let's take a look at Asia Pacific and a lot of issues on the global front. It does seem to be in the red. The Nikkei 225 down by 2.2% this morning. Singapore as well down by more than 1%. This despite the fact, of course, that global shares have climbed about 16% this year. But there are, of course, concerns that there will be tighter monetary policy, virus flare-ups, and even a slowdown in the Chinese economy. And new strand here that the South African scientists are studying a recently identified new coronavirus variant of concern, and they are fearing a fourth wave that could spread internationally. The UK will already temporarily ban flights from South Africa and five other African countries over this new dramatically different strain. So more worries there. And let's take a look at our own index, also sliding here by 0.5%, settling around 7,300 levels. Let's take a look at our movers of this morning. We are 6 minutes into trade. Wilcon leading the charge here together with Pure Gold and Avoid This. On the downside, you've got BPI, Ayala Land, and AGI lagging behind. Now, here to chat about this and other market matters, we have with us Japheth Tantiangco of Phil Stocks. Good morning, Japheth, and welcome back.
Good morning, Ma'am Danny. Thank you very much for having me.
Okay, Japheth, we have two conflicting issues here. You had, Secretary Dominguez saying this is it, and next year, if we continue on this path of lowering COVID cases, we will see continued growth. And then on the other hand, you've got even the WHO already
Mm.
quite worried about this South African variant. Tell us, what are the investors feeling?
I believe that that is what explains. What explains the market's movement right now. If you're going to check the market, so we've been moving within a range. That's with a support of 7,300 and a resistance of 7,500. So the market has already rallied so much. I mean, from its mid-year low, it's already rallied by 19.5%. So right now, investors are taking a breather. They're trading within the said range, and while they're trading within that while they're trading within that range, they're waiting for further developments as to what has been mentioned. Okay, we've seen good results so far in the third quarter, both in the GDP and on corporate results. And what investors would like to see is if this momentum will be kept, if what Secretary Carlos Dominguez was saying would come to pass. If we see signs of that, if we see that there's really this growth momentum building up for the Philippine economy, and which could be supported by by a further easing of further decline in cases and a further easing of restrictions, then we may see a further rally in the local bourse with the possibility of hitting or even breaching that 7,500 resistance level. So that's one thing that investors are looking into. Another thing that that's stopping the market from advancing further right now is the second one which you've mentioned, which is the uncertainties with respect to our COVID-19 situation. Onshore, so far, it's been going good, but the problem here is offshore. I mean, we've seen Europe experiencing another wave, and this is causing an alarm in global markets. And at the same time, as you mentioned, there is this new variant, which, well, for now, it's a variant that is being monitored by the WHO. But if this escalates into something worse, then it could spell as a downside risk for the local pores.
Okay, so worst might not be over just yet. So,
Yes.
you have to really be vigilant. You're cautiously optimistic, is what they always say. Let's talk about the banks here and how they will move after the comments of Governor Diokno saying, first of all, that the monetary policy to stay accommodative, and they might still be cutting the RRR to single digit levels before his term ends on 2023. Will that benefit the banks in any way, given that the loan growth is nevertheless tepid, despite the fact that the interest rates have been at record lows?
I believe as with respect to the RRR cut, that will serve as a catalyst for the banks. Yes, loan growth. So far, well, for the past months, we've already seen loan grow, bank lending growing, though not yet at a strong pace, but at least it's already growing, and this is driven by the loan demand from the production side of the economy. Okay, so we're already seeing some bank lending growth there. And assuming that the economy will continue with its growth momentum, then we will see confidence grow stronger. And as confidence grows stronger, then we will see more bank lending, and this is going to help the banks. And something that can further boost that, something that can further boost banks is going to be the RR cut, because with the RRR cut, banks will now be able to use more of what has been deposited to them, so they'll be able to use more of their resources. And yes, and it's going to blend well with the growth, with the foreseen growth, strong growth in bank lending once the economy, once the economic recovery goes full swing.
Is the worst over for banks when it comes to the non-performing loans? And can you say that that's been fully priced in already in the slide of the shares of the banks, and that there is a clear trend towards them going back to pre-pandemic levels?
Assuming that the economy will continue its recovery, assuming that restrictions will be further eased, assuming that the economy will further reopen, and that everything will get back to at least get back to close to normal, then we will see the capacity of borrowers. We will see stronger capacity on the side of the borrowers in terms of servicing their debts. And once that happens, then it will mitigate the risks concerning the non-performing loans. Plus, again, with the reopening of the economy, there's going to be a return, stronger confidence, which will lead to more bank lending. So that's the bright side for the banks. But of course, again, there's that risk. The risk is we are still uncertain with COVID-19. Right now, as mentioned, everything's going. So far, it's progressing for the local scenario. But we have these global offshore COVID-19 risks to watch out for. And if these offshore COVID-19 risks spill over to the local to the local economy, and leads to, again, to a implementation of the strict quarantine measures, the strict social restrictions, then that's going to spell danger for our banks.
Okay, let's talk about one specific stock, URC, which is right now suspended. This, as they have actually announced that they will be acquiring Crunchy Foods, that is a Malaysian company, and I've calculated that that's around 23 billion pesos of an acquisition. How excited are you for this? Comparing this, of course, to URC's third quarter performance or year to date performance, and whether going into foreign markets right now makes sense for them.
Well, with respect to URC, even before that acquisition, if you're going to look at their valuation, at least price to earnings and price to book wise, they're trading below the 5-year averages. So you can consider URC undervalued right now. Though again, a problem for URC is the current inflation scenario in the Philippines. So consumer spending is being challenged by inflation. So that's the biggest risk so far for URC. But again, nonetheless, as mentioned, they are currently undervalued marketability ratio wise. And with this expansion of into Malaysia, it adds prospects to them. I mean, they're expanding into another fast growing economy, which is Malaysia, so they can take advantage of the power of the consumer spending there. And of course, it's going to add to the financial performance of the company and eventually to its valuations. So yeah, this is something that we see as good for URC.
Any idea on how we should value the stock price after the suspension is lifted? It closed at 132 pesos and 20 centavos. How can we understand what's the new value given this acquisition?
Well, with respect to that, of course, it's going to boost the earnings of URC. So it's going to add to the profitability, and by adding to the profitability, of course, it can perhaps provide more dividends to the investors. At the same time, it can have more space for reinvestment. So it's really going to it's really going to add to to the value of URC.
Okay, so one to be watching out for when that suspension is lifted, likely bump up in the share price. Finally, best performer of the day happens, or the morning at least, happens to be Wilcon. This amid all of the hype on IKEA opening here in the Philippines. Can you assess that and how worried you are about Wilcon and even the another IPO recently, which was of course All Home? being affected here substantially in the share price because of the entry of IKEA.
Yes, IKEA, the entry of IKEA into the Philippines will serve as a big competition for Wilcon and for All Home. But at least it's just going to be at their base in the National Capital Region, since the IKEA was, the one was established in Pasay. So with respect to the National Capital Region, they're based in the National Capital Region. We may see some tight competition there, so margins could be pressured in that region. But the advantage of Wilcon and All Home is they're already spread throughout the country. So I believe this would be, given that the National Capital Region base is being challenged by the entry of IKEA, this would be the time that Wilcon and All Home should be focusing more on, the state side, on their branches in the branches in the provinces. And if they're able to strengthen their bases here in the provinces, then it could offset the risks brought by the tighter competition.
Okay, so the reach there is still much bigger when it comes geographically. Wilcon trading at 31 pesos and 25 centavos. All home, meanwhile, down by more than 3% to 9 pesos and 40 centavos. Thank you so much for those insights, Jafet Tatianco of Philstocks.
You're very much welcome.
Here are other headlines we're keeping our eyes on. The SEC has issued a halt order against a digital currency, Shan Coin. In a cease and desist order dated November 3, the regulator noted that Xian Coin is not registered as a corporation or as a partnership. It also does not have a secondary license to operate as a broker or dealer of securities. The commission released an advisory against Xian Coin in June, warning that investors that founder Cian Raza will be using it to fund his underground activities. Despite the issuance of the advisory, the Commission's Enforcement and Investor Protection Department continued to receive reports and complaints about XNC's continued sale. Now, the Agriculture Department insists that the rice tarification law has benefited consumers while raising farmers' incomes. The department also dismissed the claims that the main benefit of cheap rice is based on misleading data. Agriculture Secretary William Dar said that rice tarification has brought down the retail price compared to prices before the law came into force. Dar believes that the law is a quote transformative reform that helped the industry stakeholders. The department adds RCEF raised the output of palay by 17% while lowering production costs. The Federation of Free Farmers has expressed its opposition to the DA's claims that the performance of the rice sector is improving as a result of the tarification. The group said the DA is hiding the fact that rice prices after the RTL were actually the same or slightly higher than 2017 prices. And that's a first look into the business day. Today is Friday, November 26, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.